really I think we'd have to draw a distinction between the near-term drivers of markets and then the longer-term themes that we continue to find attractive, irrespective of near-term volatility. So clearly at the moment you're seeing trade tensions between the United States and China dominate the emerging markets narrative. Our view is that China has already done a substantial amount over recent years, both to diversify its trading partners away from a dependence on the United States. For example, it exports roughly twice as much to other emerging markets than it does to the US, while simultaneously reducing its own dependence on trade and shifting its economy more towards domestic orientation. And so beyond this near-term volatility, we still retain confidence on China's long-term outlook. More broadly, the themes that we find attractive in emerging markets haven't changed in the face of this noise, if you will. So we like consumption, both the story of under-penetration in markets, in emerging markets, but also the shift towards premiumization, consumers spending more on higher quality brands that we're seeing across various markets. We think technology as a theme is one that will be with us for many years to come. And more broadly, we like the new economy in terms of healthcare. In terms of the financial stocks that we look at, we're primarily focused on consumer-orientated retail banks. Really companies that have internal drivers of sustainable earnings growth over the longer term. So irrespective of near-term volatility, that longer-term thesis towards the asset class has not changed. I'm going to take the easy way out and say that we find opportunities in all three regions. I would say that from a long-term structural perspective, simply because of the sheer size and the breadth of opportunities, Asia is an essential part of any emerging markets allocation. The themes of consumption, healthcare, and of course technology are really very, very much at the forefront in these economies, from the large internet stocks through to semiconductor hardware. You're seeing companies that are world-class in terms of generating intellectual property and very sustainable earnings growth over the longer term. The demographics clearly are very favorable for Asia in terms of sheer size, and so that scope for both penetration in terms of consumer demand as well as premiumization is very strong. And then of course the nascent healthcare space across Asia is very, very attractive. When it comes to Latin America, the view is perhaps a little bit more nuanced. You're seeing the region emerge from what had been quite a deep cyclical downturn in recent years. We've also seen political change across a number of economies. Nonetheless, we do find some very attractive long-term opportunities that are amongst our very much our core stock holdings in our global and Latin American regional funds. So in particular, we find the banking space very attractive. These companies operating in the private sector typically have very strong net interest margins, high quality corporate governance and management teams, and have shown a sustained ability to generate returns to shareholders over the longer term. In the consumer space, we find quite a lot of stocks have a reasonable amount of operating leverage on their balance sheet, and so with a relatively marginal improvement in this consumer environment, we can see increased revenues and quite a sharp increase in earnings. When it comes to emerging Europe, the opportunity set is probably a little bit slimmer. We find Russia the most attractive market, of course, the behemoth in the region. And across there, whilst the market as a whole has been perennially cheap, and often cheap for good reason, we find some very, very high quality stocks that we think are really overlooked by the market. Whether that's in the banking space, select energy names, or even in technology, we find there are some excellent companies with excellent corporate governance, something that is not often associated with Russia, sustainably generating earnings growth and in a secular growth environment that we think is going to continue for some time to come. So, a very good question. So the Templeton Emerging Markets Fund would be our flagship, most broad-based offering in the emerging market space. We did have a new portfolio manager take over this strategy back in 2015. There have been a number of changes that have taken place, and since then we've seen a very compelling improvement in performance. Really, this is seeking to take advantage of all of those themes we've been outlining in the prior questions, and of course across all regions and emerging markets. Some of the trends perhaps that weren't mentioned previously would include the corporate governance aspect that really is an increasing focus for us in emerging markets. We found this is perhaps an under-noticed change that we're seeing in numerous markets, from South Korea to Russia, where we're seeing management take distinctive changes to improve payout ratios, to improve governance structures that we believe can result in a longer-term re-rating of these companies. It's also worth emphasizing that with our Templeton Emerging Markets Fund, it really is offering a very differentiated product. Roughly half of the holdings are different from all of our top competitors, and roughly 1/3 of the holdings are off benchmark. So it's a very active, very idiosyncratic approach to emerging market that we think offers a very strong sort of alpha opportunity going forwards. And it really seeks to leverage the entire team that we have of well over 50 analysts and portfolio managers across numerous markets in the emerging world.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。